Welcome to Veranda CA. In today's session, we'll be discussing about the Equalisation Levy. So, what is this Equalisation Levy? In the earlier session, we were talking about this concept of digital economy. So, what has happened in this over period? We even spoke about this last 2 years in this COVID scenarios, where there is a rapid growth, right? Rapid growth in the IT related business. When you talk about IT, today we feel like everything around us is based on IT. From work from home, connected from wherever you are. So whatever you are talking about, ordering goods, ordering food, ordering groceries, whatever it is, we are talking about this information technology, right? So there is rapid growth of information and communication technology. So this has led to this digital economy. So it is growing at a pace than anyone could probably imagine. So and it even says that every year, even the lowest of prediction is around 10% per annum is what the digital economy is actually growing. This digital economy, what actually does this mean? When you use the word digital, let's say you are working from home. When you are working from home, you sit at home, but the data that you are accessing is what is critical. The data is not located at home. It is located in a location probably which you do not know. Let's say your office is in Chennai and you are sitting at your home in Mumbai. Now you are accessing a data which probably is from the building located in Chennai, but the data is not located in Chennai or in Mumbai. It is located somewhere in a server, right? So it's in a digital domain. It is in a digital domain and it is not based out of the physical locations that we are talking about. It is happening in a cyberspace, something like your cloud or whatever, right? You can call it cloud or digital or whatever. So now derive substantial value. So whatever the transaction is happening, it is not from the physical space but from the digital space. So either they are actually receiving the let's say the data is from the digital world. So basically that data is what is providing the value. So whatever services are provided, the substantial value is from the data collected and transmitted from such network. So now the substantial value, when you say substantial value, is basically the value of the transaction or whatever is basically from the data collected and transmitted in such particular network. So this is the effect of this digital economy. So you don't have a location, you don't have a particular the value is still being created from the what you call is from the data collected and transmitted from such network. So this is what you are calling as a digital economy. Now this digital economy has resulted in a scenario where it is brick and mortar to click and order. So when you say brick and mortar, it is basically like a building premises. So when you say brick and mortar, it is like a building. So a physical building where goods are stored and sold and whatever it is. So this is how business was always being considered. This is how a business was supposed to be happening. But these days what has taken place, it has taken to this concept of click and order. So you're sitting in a place, you're clicking and ordering something, right? So this click and order has become so effective these days. And as I've been telling you guys, the last 2 years, this is what is the business, right? So this is how almost every business is operating in this manner. So that's the importance of this digital economy. Now in this digital economy, what are the taxation issues? We also discussed in this BEPS action plan also. The first and foremost issue is that characterizing the nature. What is the nature of transaction? Is it actually sale of good or sale of services or nothing? There is no transaction at all. What do you characterize these transactions? How do you link? How do you create a nexus or a link between the transaction, the activity and the jurisdiction? How do you combine these two? So how do you create this triangle? So there are three important things for taxation. So one is the transaction, whether it is taxable or whatever, and then the activity. Is it revenue, capital, where is it happening and all those things, and the location. Where is this income taxable, right? All these three put together only gives you a tax incidence. Now, how do you determine here? How do you determine what transaction? How do you determine what activity? Forget everything. How do you determine the jurisdiction that must be taxing this particular transaction? So as we said, there is a difficulty in locating the transaction and also identifying the transaction. So, there is difficulty in locating the transaction, also identifying the taxpayer. So, this is what becomes what you call, this is the difficulty as far as a tax department is concerned. The difficulty will be in locating the transaction and identifying the taxpayer. Now, what are the fundamental PE concepts? So, we said permanent establishment is basically a fixed place of business. So, here there is no place of business because you don't know where actually the business is happening. It's happening in cloud. There is no location. So, all this must be still found out. Though it is happening in cloud, you must be finding a business, place of business. Though it is happening in cloud, you must be finding a location. So, we need to find the new set of rules for this new digital reality. So, that's what is this digital economy, the impact of digital economy is. Now, when we said categorizing the nature of payments, one of the primary confusion is, let's say there is a service, this services can be categorized as technical services. Typically, the word technical services is, there is a skill involved, a human skill involved, which is not something which you can just like that get it. It must be through a stream of education. So, here technically what you mean is, the technical services means that there is no human intervention. That is what in this case, in digital economy, there could be a scenario that the services provided does not have any human intervention. In that case, it cannot be categorized as a technical services. So, rather than saying you cannot categorize it, we can say that it is difficult there is a difficulty in categorizing it as a technical services. So, that these are the taxation issues which is being faced, and these transactions could result in a situation where there is no location and it could go tax free, that there is no tax involved in this particular transaction itself. So, there could be this scenario, right. So, this is what we are talking about as the digital economy. Now, from the perspective of Income Tax Act, if you actually analyze this digital economy in the perspective of Income Tax Act provides you this concept of significant economic presence. It provides you this concept of significant economic presence in section 9, and you have withholding taxes in chapter 17, discuss about this withholding taxes. Then you have this equalization levy, which is what we are going to discuss about in this particular session, which was introduced in Finance Act 2017. So, these are the three things that Indian government has taken steps to address the taxation issues relating to digital economy. Now, the next thing is, what are the recommendations? So, basically, when you speak about this recommendations, what are the recommendations provided by this action plan 1? The first recommendation is upgrading the definitions, that is, whatever currently refers as permanent establishment, it should also include the significant economic presence, that is, it should also include the virtual PE, right. So, this is what is recommended from the BEPS 1. And then what could be the virtual PE? So, when you say virtual PE, we said it is a virtual fixed place of business. So, PE requires a fixed place of business. Such place of business could be virtual also, So, this creation of PEs when the enterprise maintains a website. So, that is what we are talking about. When the transaction is happening through a website, when the income is generated through that website might be generally website is accessed through servers. That server might be located in another enterprises or in another jurisdiction. So, that could be called as a virtual permanent establishment. So, that is what you are calling. So, you are actually accessing internet. When you type www. some website address, it goes to a particular location, whichever part of the world it is, from your home, from the place you are actually sitting. From there, it travels to any location that it could be. It could be Singapore, Malaysia or Dubai, wherever it is. It goes to that particular place where the server is. It collects information, brings it back to you. So, this is what is the server's role. So, when the server is actually located elsewhere, the income, the source of income is from that particular location, because that is only giving you the income. So that location becomes the source place. So that's what is discussed as virtual PE. And BEPS says, why don't you create in local laws in the particular country, let's say Income Tax Act, why don't you create a local law on withholding taxes? Moment you create a withholding taxes, automatically an income gets taxed in your own location, and you collect taxes for the transaction. So what happens? There is no non-taxation. You automatically collect your due share of taxes. Why don't you do this? So BEPS recommends withholding taxes on various things. It also recommends, in case if you are not giving withholding, why don't you provide concept of equalization levy? Equalization levy is something, an additional tax on certain transactions. That is what we are going to see this in detail in this particular chapter itself. Now, this digital transaction received by a non-resident. So, typically it is a transaction where there is some income received by a non-resident, which we say should either be tax deductible or an equalization levy should be levied on such transactions. This is based on whatever we will be understanding in this concept of equalization levy. For time being, what is the measure that is recommended by the BEPS? It says you will have to introduce certain additional safeguards for BEPS. So, to avoid BEPS happening, that is base erosion and profit shifting happening, to avoid that, the domestic tax laws, till a proper international guideline is introduced, you could bring in some additional safeguards. So, that is what is recommended in interim measure. What is the action plan? So, what is the action plan? Basically, action plan 1 talks about this concept of pillar 1, and this is a long term solution. So, when you say pillar 1, it is about reallocation of profit. So, there could be certain marketing or certain services which is actually attributable, but you do not know. So, because of this virtual location, certain profit is actually attributable to a location. Now, you are reallocating. Say that, see, out of 100%, 10% of profit must be allocated to your particular marketing activity, and rest of the profits, probably this much should be allocated to the India. So, now this reallocation of profit is called as pillar 1. This is actually called as unified approach. So, you are reallocating the profit in a manner that profit whatever must have been attributable to that location that we are talking, in our case India, comes to India. So, that is what you mean by action plan by thing. Of all this, one of the new concepts that we will be discussing today in the rest of the session is going to be this equalization levy. BEPS action plan 1 says that the domestic tax laws might provide provisions for withholding taxes, or equalization levy. So, they may provide laws for this equalization levy. So, to address all what has been discussed in BEPS action plan 1, to address this issue, the Finance Act 2016, earlier I said it was 2017, sorry, it is Finance Act 2016, came out with this concept of equalization levy. So, this equalization levy was basically, as the word says, it is a levy, right? So, levy. So, this levy is levied on specified services, that is one, and this was what was recommended in Finance Act 2016 to address this digital economy. So, what do they say? This equalization levy shall be levied on specified services received or receivable by a non-resident not having a permanent establishment in India. Why is this important? Because moment you have a permanent establishment in India, there is already a business connection or there is already a significant economic presence. Once that is proved, once a business connection is proved, you have a permanent establishment here in India. Moment you have a permanent establishment in India, you are taxable to the income attributable to that permanent establishment. So, that income will not be again charged as equalization levy. So, it becomes like a double taxation. To avoid this, the rule says it is applicable on specified services received or receivable by a non-resident who's not having a permanent establishment in India, who's not having a permanent establishment in India. So he is a recipient, right? So basically it's like a non-resident provides service to a resident, or a non-resident who is having a permanent establishment. So they are rendering a service. What service? Specified service. So for this service, the resident is making the payment. So they are making the payment. So for this payment, equalization levy is applicable. So that's what this provision talks about. So the details of this equalization levy was introduced as notification on 27th May 2016, making it effective from 1st June 2016. And this chapter extends to the whole of India except Jammu and Kashmir. It's more like most of your indirect taxes and other things. It is applicable to the whole of India except Jammu and Kashmir. Now, in Finance Act 2020, the government thought there were recommendations that there are few more transactions which should be brought into this concept of equalization levy. Whatever we have been discussing is the concept of specified services. The specified services is restricted to advertisement and market space, that is marketing. So advertisement and marketing. Now this advertisement and marketing is what was covered in this Finance Act 2016, but now in Finance Act 2020, they said we will introduce few more transactions relating to e-commerce supply or services. So now there is a consideration received or receivable for e-commerce supply or services made or provided or facilitated. See the words, right? So they say either that e-commerce services could be made, that is one, or could be provided, or could be facilitated. When you see this facilitated, probably what do you remember? Let's take these examples like Flipkart or Amazon. They are actually called as market aggregators. They don't sell, right? They don't sell. They facilitate sales. They facilitate selling. They facilitate such supply of goods or services. So in this case, what they are calling as e-commerce operator is not only who is actually making such transaction or who is not only providing such transaction, it also includes who is facilitating such transactions. So that's what you are being. So whatever consideration is receivable for such services is what is going to be discussed here. So now, when you say this e-commerce services, it is not applicable. That is, whenever when a specific transaction, when a transaction is already specifically covered under some other provisions, then you don't bring it here, right? Like your permanent establishment concept. What did we say? When the non-resident has a P in India, then amount received by them is not considered as equalization levy for specified services. We discussed in this earlier example of this non-resident not having a P in India is only considered. We said P must not be there, right? So only for such transaction. Similarly, another exclusion is about royalty or fee for technical services. So since similar to this permanent establishment, we said once permanent establishment is available, that is once transactions are happening through permanent establishment, then that income will be attributable, whatever is attributable to India will automatically be taxable in India. You don't need charge equalization levy and all. Similarly, if a particular transaction is already classified as a royalty or fee for technical services under the Income Tax Act, that is your section 9.1, under section 9.1 or your, that is your 9.1.6 and 7 talks about royalty and fee for technical services. So this 6 and 7 read along with the double taxation avoidance agreement specified under section 90 or 90A. So if it is classified as royalty or fee for technical services under these act or the DTAA, then even though it is a specified service, even though if it is a e-commerce transaction, it will not be applicable. This equalization levy is not applicable because you cannot tax double time. You cannot tax twice on the same transaction. So that is the basic understanding across the act. Across the act, You cannot charge the same transaction twice. That is what the purpose is. So similarly, when it is already through a PE, it is not taxable. Similarly, if it is classified as a royalty or fee for technical services, then also it is not classified. No, we have been speaking about this concept, right? We have been talking about a specified service. We have been talking about this e-commerce operator. What are the transactions that are covered as specified service? What do you mean by e-commerce? What do you mean by e-commerce? So first we will understand the specified service. When you say specified service, the first concept is online advertisement. That is advertisement provided in the online space. Exactly what it is, we'll probably what type of online advertisement we are talking about, we'll understand in the next slide, immediately next slide. And similarly, digital advertising space. This is for you to just have a overall understanding of what specified services is about. So specified services, online advertisement, digital advertising space, and anything that could be additionally notified, a usual disclaimer clause provided in the Income Tax Act. For these services, the equalization levy is 6%. So it is taxable at 6%. That is, equalization levy is levied at 6%. You actually could not use the word taxable because this is not a income tax that we are talking about. This is called as equalization levy. So that is specified service. What about e-commerce? You either sell goods online, or you provide services online, or you provide both. Either or both, facilitated. Remember, we said the importance of this word. So he is like a market aggregator. He is only facilitating for you to provide goods, for you to provide services. So that's what it is. And any combination, that is all this put together, that is this 1, 2, 3, all this put together. So when you say any combination, 1, 2, 3. So it could be or and, either or and or whatever this. So this any combination is what is there. For this e-commerce, the tax rate is 2%. That is, equalization levy is 2%. So this is about what is specified service and what is e-commerce. We will go into much more detail about what exactly is specified service. Before getting into this, we will understand how these provisions are structured. We said Finance Act 2017, right? 2016, sorry. So in this Finance Act 2016, so you have section 164. 164 is where this equalization levy begins. This is where the equalization levy begins. 164 is a definition section, and 165, section 165 is for specified services. 165A is for e-commerce. Okay. So this is the structure in which we are going to understand. Okay, what about after 165A, from 166 to various other sections? It is about the process, payment, return, assessment, rectification, all these things is what discussed after 165A, that is from 166. So we will start with 164. 164 is a definition section. It's like your section 2 of Income Tax Act. It's like your section 92F of transfer pricing provisions. So these are all called as definition sections, right? You have 43, section 43 in profit or gains from business or profession, which is a definition section of the sections relating to business or profession. So similarly, this Finance Act 2016 for equalization levy, 164 is the definition section. So it basically says, 164D says, equalization levy is a tax leviable on consideration received or receivable for any specified service or e-commerce supply or services. So this is what you are talking about in your e-commerce equalization levy, that is a definition. Now, what is a specified service? We already discussed. Just for briefly understanding, we said online advertisement, digital advertising space, and then anything that could be notified. So online advertisement space is fine. So what is actually online advertisement says? Let's say I go to www.google.com. I click on a particular website, search for a website and open it up. Once I have opened a website, if you have probably browsed something in Amazon, let's say you have browsed to buy a smartwatch, whatever you searched in that Amazon page will be appearing in the page that you are actually browsing now. Let's say you are browsing crickinfo.com. In crickinfo.com, you will see the space which shows the same smartwatch which you saw in this Amazon website. So this is an online advertisement space. It is automatically appearing through some arrangement between the Crickinfo place, the Crickinfo website and the Amazon website. So this online advertisement, so that is one of the specified service. The next service is also digital advertising space. What is a digital advertising space? It's a space used for online advertisement, okay. We said online advertisement. For advertisement, you need a space. Let's say in the Crickinfo website, on the right top, you have a new advertisement, a rectangle shape of some particular specification. You have a space that is called as a digital space. So that digital advertising space. So any provision for digital advertising space or any other facility or service for the purpose to facilitate this online advertisement. So that is also categorized as specified services. And the usual, anything that may be notified. So for time being, we will leave this as it is. So currently there are two services. Now this specified services, can we say that it is applicable for everyone? Moment it is classified as specified service, can we say that equalization levy is applicable? For this, section 165 provides, this 165 provides about what is this charge for specified services. So we discussed there are three main sections. 164 is definition. 165 provides what is the charge for the specified service. 165A provides what is the charge for equalization levy. Now we will, e-commerce operator. Now we will see about this 165, that is your charge. So what is this charge? It says 6%. 6% on the amount of consideration for specified service received or receivable by a person. So now we are coming into the specific. We already said what is a specified service, that is your online advertisement and digital advertisement space or facility or service for the purpose of this online advertisement. So for such services, if such service is received by a non-resident, okay, we saw in our example, right, USA is providing service to India, that is being a non-resident from. So who is actually received the service and making payment? It is a resident in India. He is a resident in India and carrying on. You see this word and. So it is and carrying on. So this and carrying on business or profession is what is important. So a person resident in India is basically carrying on business or profession. So there is a word, this and, which is very important, and so these are the two conditions. He must be a person resident in India, or and he must be carrying on business or profession, or he could be a non-resident having PE in India. So which means moment he has a PE in India, which means he has a business connection in India, which means such income is attributable to India. It is nothing like a resident. So he himself is like a resident only. So non-resident having P in India. So this is the possibility. So we saw this already in the earlier while understanding the structure of this equalization levy itself. So now this person, that is the person who is paying, the resident or the non-resident PE, paying to the non-resident shall collect 6%. So this 6% on the amount of consideration of specified service shall be collected as equalization levy. So this is the tax levy, 6%. And of course, any section where you say it is taxable will always have exceptions. For example, when you say particular section, let's say 194J, TDS must be deducted, you say up to 30,000 TDS is not deductible. If it is personal in nature, TDS is not deductible, right? You have exceptions. So similarly, every provision will probably have an exceptions. So here the exception is, if the first exception is the non-resident providing the service as a PE. So the non-resident who is actually providing, we said it must be provided by a non-resident who does not have a PE. So if he is providing through PE, it's like he himself is a resident in India, so equalization levy is not applicable. And the specified services is connected with such PE. So non-resident PE is the one who is rendering services, and such services is connected with the PE. Then there is an exception. So the first exception is NRI PE being the provider. So the service provider is a non-resident Indian through the permanent establishment. Then the second thing is where the aggregate payment does not exceed 1 lakh. So if the total payment in that particular year for such services does not exceed 1 lakh. So if someone is paying a resident paying to a non-resident, if such payment does not exceed 1 lakh. So that's the next thing. And finally, if it is not for the purpose of business or profession, right? So if it is not for the purpose of business or profession, these are the exceptions. So it is basically, the first exception is non-resident through a P in India. The second exception is does not exceed 1 lakh in a year in the relevant previous year, and if it is not for the purpose of business or profession. So these are the three situations where this equalization levy will not be charged. So with that, we have completed about the specified service. Now we need to understand with respect to the e-commerce operator. So we said there is a new amendment in Finance Act 2020 to what? Finance Act 2020 has amended Finance Act 2016, right? They have not amended the Income Tax Act, because equalization levy, like your service tax, is part of the Finance Act. It is not part of the income tax. So this Finance Act 2016, where this section 164, the definition section, provides who is an e-commerce operator. We will call him as ECP, the e-commerce operator. So this e-commerce operator is basically a non-resident, right? So he must be a non-resident. He owns, operates or manages. He can do any of this activity. So that's the second condition. The third condition is such activity, that is whatever he is owning, operating or managing is electronical, is either digital or electronic facility or platform. So it is completely digital. A non-resident owns, manages or operates something in the digital or electronic platform or facility. What is he doing? He is sale of goods and provision of services. So he is either selling goods or providing services through online, right? So this is the fourth condition. So what are the fourth conditions? So basically, who is an e-commerce operator? A non-resident who owns, manages or operates what? Digital or electronic facility or platform. In that, what do they do? What do they maintain this for? What do they maintain this for? Online sale of goods or provision of services or both. So this is what e-commerce, this is who an e-commerce operator is. Now what is that called as e-commerce supplier services? So we said the transaction received or receivable, consideration received or receivable for e-commerce supply. Now this e-commerce supplier services refers to online sale of goods or services. So online sale of goods or services, first thing. Second is provision of services. So this is also online provision of services. Either or both what? Facilitated by the e-commerce operator. So that's what we are meaning. This is similar to the online digital advertising and all we were talking about. So facilitating is also an activity. So either or both facilitated by the e-commerce operator. Now it could also be the combination listed above. So what do you mean by the combination? Let's say this is the first condition, this is the second activity, this is the third activity. This could be 1 or 2 or 3 or combination 1 and 2, 2 and 3 and 1 and 3 or whatever, right? So this combination is what you are calling as e-commerce supplier services. Now online would include, when you say online, there is a word online in everything, right? Sale of goods, provision of services, facilitating, everything. So what do you mean by online? It's basically your acceptance of offer of sale, placing of purchase orders, right? The PO, the sale, acceptance of purchase order, payment of consideration, the supply of goods. If either of this is online, so online would include one or more which involves acceptance of offer, the placing of purchase order, the placing of the payment consideration, acceptance of purchase order or supply of goods. If one of this transaction is happening in online, then that's what you are meaning by online transaction. So this is what you are meaning by online transaction. The specified online transaction shall be called as an e-commerce supply or services. So we saw about how specified services is charged, that is at 6%. Now what about the charge for e-commerce services? So this is provided in section 165A. So what is the charge? 2% on the amount of consideration received or receivable by an e-commerce operator from e-commerce supplier services. So that's what so you are receiving money. So the one who is receiving is an e-commerce operator. So e-commerce operator is a non-resident who owns, manages or operates what? Digital or electronic platform or facility for online sale of goods or provision of services. So such person is receiving from an e-commerce supplier services. He has made some supplier services to whom? To a person resident in India carrying on business or profession, a non-resident in specified circumstances, and then you have a person who buys such goods or services both using Indian IPA. So basically IP address. So IPA is IP address located in India. So now you are either a resident who is carrying on business or profession or a non-resident in specified circumstances. We will see what that it is. And then you have a person who buys such goods or services through using IP address located in India. So somewhere India comes into picture. Either you are in India or your IP address is in India, somewhere or other. If it is happening through India, even if it is through that IP address located in India, they have also fall under this. When is it not chargeable? The e-commerce operator as a PE in India. So the e-commerce operator as a PE in India, which means the income of that portion is actually attributable to India already. So equalization levy shall not be levied. Where equalization levy is already levied under section 165, that is, this is also a specified service. So since equalization levy has already been collected at 6%, then don't collect under 165A, which is 2%. Sales turnover gross limits is less than 2 crore. So during the relevant previous year, if the relevant sales turnover or gross receipts of that e-commerce operator from such transaction, that is only on these transactions we are talking about as e-commerce supplier services, if from such transactions the total volume is less than 2 crore, then in that case it is not chargeable. Equalization levy is not chargeable for e-commerce. We saw a word specified circumstances. So what exactly is specified circumstances? So specified circumstances is basically where sale of advertisement is made or sale of data collected from a person, right? So these two cases, that is sale of advertisement or sale of data collected from a person who is a resident in India who accesses the advertisement through Indian IPA. Similarly, a person who is a resident in India or from a person who uses Indian IPA. So typically if you see, it either includes a resident in India or a person who is accessing such data or advertisement through Indian IP address. What did you say? When you say IPA, it is IP address located in India. So that is what you mean by this. So these are called as specified circumstances. So such non-resident is also covered under this particular point. So they are a non-resident, but they are accessing this information through Indian IP address. So this is what equalization levy on e-commerce is about. Now, what are the other provisions? We said from section 166, you have various other provisions on payment, return filing and assessment and other things. So what is the first thing? It is about the payment. So 166 is of payment of specified services. So basically 7th of the month of immediately following the said calendar month. So if it is like let's say February, you will have to pay within 7th March, right? So that's the due date. So that's what it is about. But 166A for e-commerce operator, it says it is 7th only, but immediately following the quarter. So in this case, let's say if it is let's take something like January or February, whatever we said. Now for both this month, be it January or February, the due date will be 7th April. Why? Because that's the subsequent month after the quarter ending. April, January, February, March is the, I'm sorry, I'll probably rephrase this to give you a different answer, different phrase. So basically we'll take October, November. So for both October, November, the due date will be 7th January, because January is the subsequent month of the quarter ending 31st December. So 7th January is the due date. Why did I actually write that 7th April and remove it is because for the quarter ending 31st March, so whatever quarter ending for January, February, March, the due date is 31st March itself. So if it is January or February, the due date will only be 31st March. So that's what it is. So it is quarter ending, it is 7th of subsequent month. For quarter ending March alone, it is 31st March itself. So they must furnish a statement in form number 1 before 30th June of immediately next financial year. So this financial year, for example, if you are talking about financial year 21-22, 30 June 22. So 31st March 22 is the year end before 30th June of that financial year. So for this financial year, it is 30th June 2022. So that is what you need to file, the due date for filing for financial year 21-22. And in case if there is any delay or something, it should be filed before expiry of 2 years from the relevant financial year. So if it is 21-22, 2 years from the relevant financial year, so it is 31st March 24. Before that, they need to file it. And in case once you have received a notice for non-filing or something, you must file it within 30 days. So that's the due date for furnishing statement under section 167. And then once this return is furnished, that is, then you have this automatic processing, that is your 168. 168 is something like your 143 one from your income tax, which is automatic, right? Similarly, you have a provision in TDS also, where you say after immediately the statement is furnished, within 1 year from the end of the financial year, the statement is furnished. That is, if the statement is furnished in 36/22, this belongs to financial year 22-23, right? So now 1 year end is 31st March 24 from the end of financial year of statement furnished. So a notice shall be sent before 31st March 24. It shall include that whatever is being the processing of statement is for the purpose of arithmetical error, interest calculation and payable refund calculation, which is evident on record, right? So the changes which are the mistake apparent on record. So the arithmetical error refers to no subject involved, no technicality involved. It is about straight away some mistake or error, that is what is rectified. And whenever there is a notice of demand, it will be issued in form number 2 to the respective assessee. And then you have section 169, whereby it is about rectification of mistakes. So when you say rectification of mistake, whenever there is a mistake, it's something like your 154. So whenever there is a mistake apparent on record, within 1 year from the end of the financial year in which relevant information was actually furnished. So from that year, within 1 year, it is suo moto, that is assessing officer himself could call, that is the assessee himself could call for a revision, or the assessing officer might send a notice. So I myself can call for a revision, or the assessing officer will send me a notice saying that there is a rectification which has to be addressed. So now if there is any change which will create additional liability, which will create increasing liability, what should happen? I guess everyone knows the answer for this, because whenever an opportunity has to be provided, whenever there is a liability that is getting increased. In short words, we have also discussed this. In tax term, what did we call? We said increase in profit or decrease in loss, right. So, for this it is mandatory that an opportunity is provided. So, similarly here whatever we are talking about, whenever there is an increase in liability of this equalization levy, unless a reasonable opportunity is provided, it cannot be changed, and for whatever delay it is, interest at 1% per month must be paid. If there is a delay in payment of this equalization levy, it is 1% per month. And what about when there is a failure to deduct or pay? There is a penalty. 171 talks about that penalty. If there is a failure in deduction, then 100% of equalization levy will be the penalty. If there is a failure in remittance, that is you have collected, you have deducted, but you have not remitted, in that case it is 1000 per day. But however, the maximum is equalization levy. So, it is 1000 per day or the maximum of equalization levy. What if you have failed to furnish the statement itself? It's rupees 100 for each day of failure. So, there is no restriction here. It is straight away 100 per day for each day of failure. What if there is whenever you call for a penalty, you wanted to issue a penalty, the assessing officer sends a notice for levying penalty on this. In this case, if reasonable cause is proved, that is whenever there is a failure, if there is a reasonable cause that is be proved, that is why they were not able to furnish the statement on time, why were they not able to remit the equalization levy on time. So, if they could find a reasonable cause, if the assessing officer is satisfied with that cause, what is reasonable cause? There is no proper explanation. It's a common language, in a common language, in an ordinary language we can interpret this word. So, if there is a reasonable cause, if it is justifiable in the eyes of assessing officer, if it is there, then if it is proved, then penalty should not be levied. No penalty should be levied under section 173 of Finance Act 2017. If there is any false information is provided and it is later identified by the assessing officer or any point in time, it could lead to imprisonment up to 3 years and fine. So, it is not an option. So, there could be an imprisonment up to 3 years including fine involved. So, that is a strict procedure. The other provisions involved, apart from whatever the procedural things that we discussed about remitting, furnishing statement, assessment, all those things, other provision is whatever procedure we discussed about for Commissioner of Appeals in regular income tax proceedings, same applies to this equalization levy also. Similarly, appellate tribunal also apply. Only that the fee is fixed at 1000 for both CIT appeals and tribunal. So, whatever is applicable for income tax procedure for filing an appeal before Commissioner of Income Tax Appeal or before Income Tax Appellate Tribunal, whatever the situation may be, same applies to equalization levy, but here the fee is only 1000 and it is not a slab rate like what we saw in this Commissioner of Appeals. The last one is, since this equalization levy was there, what else is being introduced in Income Tax Act? First section is 10 clause 50. What is 10? 10 itself stands for exempt income. So, what is exempt? Since equalization levy has already been collected on such income, it shall not be additionally taxable. So, any specified services, whatever is there, or including this e-commerce, ECP. So, let us add plus ECP here. So, including this e-commerce operator, if there is whatever is being levied under this Finance Act 2016, such income will be exempt under section 10 clause 50. And then you have 40A1B, which is a disallowance. So, if there is any expenditure, so any expenditure on which equalization levy is deductible and has not been deducted, then such expenditure shall not be allowed as an expenditure and shall be allowed only in the year when equalization levy is paid. So, in this case, let us say India has to make payment to US for this specified service at 6%. Now, if he has not paid, this equalization levy will be disallowed. Not even the equalization levy, we will keep it as the specified service is disallowed, that is the expenditure is disallowed, not the equalization levy is disallowed, the expenditure is disallowed, and of course, whenever it is being subsequently paid or whatever, they could claim it as an expenditure. On TDS aspect, this is also newly introduced in Finance Act 2020. They have said 1% TDS on gross amount of sale or services or both with respect to this online advertisement digital marketing on space. So they say it is not applicable if the total gross amount is less than or equal to 5 lakhs, that is does not exceed 5 lakhs, plus the e-commerce supplier or service provider has provided the PAN or Aadhaar to the e-commerce operator. If this has already happened, then TDS will not be applicable on this particular transaction. So this is what is being discussed here in TDS. So with this, we have completed all the sessions for this equalization levy. So thank you for the wonderful session.